The broadcast is now starting. All attendees are in listen-only mode.
Hi everyone, I'm here at Ablesys. Welcome to the webinar, and we'll take a look at the Able Trend results today. I'll point out the buys and sells and where we put our stop losses. The key with Able Trend is the guidance chart. We have two time frames combined into one chart. In this case, what I have up right now is a daily weekly chart. This is NVIDIA. Really been making a big move to the downside, as the whole market is, especially the NASDAQ, which is again just absolutely crushed here in the past 2 months now, and it's just been a massive sell-off. Even intraday moves are just getting sold. I mean, every little kind of intraday up move is just being knocked right down. The sellers are flooding the market and knocking it right back down. So we're in a bear market. That's the way it works. We're going to be looking for shorts, or especially intraday trading. It's kind of choppy here this afternoon. The second half of the day was really choppy, but we had some decent little trends earlier, and we'll go over that chart in a few minutes. But let's take a look at a daily weekly, because many people use the daily weeklies. They don't trade intraday, and they just can't, or they don't want to. They do more longer term, and Able Trend works just as well for the long term. So we're looking for two time frames in agreement. That's the key, is we want both the daily and the weekly. What does that mean? Well, the dots are the key with Able Trend. The little red dots are the daily dots that tell us we're in a downtrend, and it more importantly tells us we have protection above the price. The red dots is resistance on the daily chart. The bigger dot is weekly. That's why you'll only see them come in once a week. Those are the weekly hidden resistance points that our algorithm is able to see for us. So we've got both the daily and the weeklies in agreement, and everything is red. Red means down, blue means up with Able Trend. Red means down, it's a downtrend. Blue means uptrend. Green just means sideways or neutral. We stay in the trades. Well, we have 4 indicators. 4 agreeing at this point here, sell. I mean, the software is basically screaming at us to sell right there, that the odds are greatly stacked in our favor that this is going to go down. 4 consistent long-term track record Able Trend indicators say it's going lower. We've got a blue bar. We've got and by the way, 3 of them. Look for the arrow. Yes. Right over here was a buy signal. I'm going to get to that in a second. Matter of fact, let me jump on that first. Blue bar, blue dot, daily dot, blue weekly dot. It was a 2 or 3 point loss because we're stopped out when the prices go under the green, under the blue dots. These blue dots are support. They stop the prices from going lower, and our stop loss would be right where at the price where this doesn't want to come in, but right where this small red blue dot is, because it's slightly lower than these blue dots. We put the stop loss on the second lower row of blue dots below the price. So when everything is blue, we're buying it, small loss. When everything is red, we're selling it short or buying puts. More than likely going to be trading options with a high price stock like this. So you got a red bar, red small dot, daily dot, red weekly dot, and a red arrow. 4 indicators say to sell it. And as long as there's red dots above, you stay short. And we just put our stop losses on the second higher small red dot above the price. Not the first one, but the second one. That's how we do it. So it's really simple. When everything is red, we go short. It means the odds are stacked in favor of it going down. When everything is blue, we're going to buy it. The odds are stacked to the upside. And that's 4 indicators of green. So anybody who had Able Trend a month and a half ago or so and took the signal would have bought puts would have put puts on NVIDIA right around 265. You're at 150 today, 149. I mean, that's a tremendous gain. These are what we call sweet spots. When the prices pull back up to the red dots and the bar goes from green to red, green to red. That's when the bars, that's a sweet spot. And it doesn't matter if this is an S&P chart, a crude oil chart, it could be a corn chart, a British pound chart, a day trading intraday chart, which we like a 1 minute, 3 minute combination. It could be a long-term, daily, weekly. Doesn't matter. We read the chart the same way. And by the way, Able Trend has the same accuracy for all markets and for all charts. We tend to favor the ES and the NQ, the E-minis, only because that's what everybody wants to trade. And it's also the most volatile. So therefore, the most profitable. And we totally agree with that. But the point is, you can trade anything with Abel trend. It doesn't matter. So, and again, as long as you've got these red dots, stay in the trade. Now, a lot of people say, oh, no, it just went up 25 points in 3 days. Oh, I gave back all that profit. No, you're staying in the trade if you're using Abel trend rules because you got the red dots above. Stay short. You're safe. You've got a wall of protection above. And notice how the prices go right to the red dots, bounce off of it, and go back down again. Kyle says, chart, how far away the dot from a low risk trade on a daily chart? Well, there's no one price for that, Kyle, because some prices are $200 in stocks, some are 100, some are 50, some are 10, some are 1,000. It's totally different for every stock. It's not like the E-mini S&P is always the same price every day. It's always the same chart every day. When you're trading other markets, the prices are totally different. So just have to use a little judgment on that. Personally, here's a good way to do it. And you can even use this for the E-minis. Even when the prices are really far, from the dots, like sometimes, especially at the open, like on the E-mini S&P and the E-mini NASDAQ, we've been studying this lately, and you can even get into that trade. I don't care if it's 20 points away. You say, oh, but my stop will be so far away. Use a 12-point stop on NQ. Use a 4-point stop on ES. And I'll get to that in a minute. Even with the prices 20 points away from the dots. So here's a good rule of thumb. You can even use this for daily charts. If you want, get into all the chart first, blue bar with blue dots. And I'm going into this more, I know this is the beginner webinar, and we have a lot of new people here, but I'm just going to answer Kyle's question right now, which is more for the advanced webinar, which is fine. So don't worry if I'm talking a little bit over your head. And I don't mean that in a negative way. I mean it only because if I had something new and this was the first day I was looking at Abel trend, I wouldn't know what the heck I was looking at. So I'm trying to make it as simple as possible. But for Kyle's question, Kyle, get in on the close of the first red bar with the big red dot. You can put your stop loss at the high of that red bar, which would be right there. Just put it at the high of that red bar, not at the normal place, above the red dots. Put it at the high of that red bar. And as you can see right now, you take it all the way down. You say, when do I then when the second higher red dot, the second row of higher red dots, is at that price or lower, then we switch over to the normal stop loss rules. I'll go into that detail if you want to give me a call tomorrow. I think I might be losing a lot of people in the room going over that, but hopefully that made sense to you and that was clear. Get in on every single first red bar, red dot, especially the red bar, even blue bar, blue dot, regardless of how far it is away. Just put your stop loss on the low of the blue bar, on the high of the red bar. This way you've got a nice tight stop and you're in on the trade, because so many of them on the first blue bar, blue dot, when you've got all four indicators agreeing, they just take off and run, like the beginning of the S&P has been doing for the past 2 months, like the beginning of the NASDAQ has been doing. And I'm finding that's a good rule of thumb, to not miss the trades because the prices are too far from the dots. And I know that's been a concern. Okay, let's take a look at GBP. This is the British pound. Works just as well for the Forex market. Doesn't matter. You got a beautiful quadruple confirmation, 4 indicators in agreement. Red bar, red dot, red arrow, red big dot. Everything is just in perfect alignment. Now, these arrows just tell us what's going on while we're in the trade. They're not sell signals. In other words, you don't short it here and then get out here. Oh, blue arrow come in. No. It just means we're favoring the upside right now, but you still, the number one rule, if you have red dots above, stay short. You're safe. We stayed short all the way today until the blue bar, blue dot came in. And there was a tremendous trade. I mean, a big-time winning trade. You're looking at about 80 pips. 80 pips on a 3-minute, 9-minute guidance chart. Oof, that's a lot of money just following the Abel trend signals. And it's the same colors and dots and rules for every market in the world. Pretty cool stuff. Yeah, let's take a look at that crude oil chart. Michael's asking for the crude oil chart today, and then I'll go over the E-mini S&P. No, not really a blackout period, Michael. Like we have kind of a blackout period for ES and NQ, which would be 12:30 to 2 o'clock Eastern time, because the market's just, it's kind of a break-even trade at that time. Now, crude oil is really good for anybody up early, like 7 o'clock Eastern and on is a great time to trade crude. That really works well. As well, the currencies, British pound, the euro, those are real early morning markets to trade. And it would be even 3 hours earlier on the West Coast. That would almost be like the middle of the night there. So those are really, really good times to trade crude oil, 7 o'clock on Eastern time. And then it kind of dies out usually in the afternoon, 2 o'clock or so. There's no blackout period like on the E-mini S&P and the E-mini NASDAQ. We say stay away from 12:30 to 2, which is 9:30 to 11 Pacific time. And as you can see over here, I mean, this is just downright unbelievable. Look at the any one of these red bars, red dots. Now we would have been stopped out here because there's the second higher row of red dots, and technically we'd have been in over there. So got to be fair about that. First trade we lost, maybe 5 cents, $50 per contract. Not much at all. However, we're right back in on these perfect textbook sweet spots. I mean, you got red bars, red dot, triple confirmation. You got the arrow, red arrow back there. You got 4 indicators of green. It just doesn't get any lower risk than that. And technically speaking, we would never stopped out or got out of the trade until right here, finally stopped out. Because the stop loss, again, goes on the second higher or previous higher red dot above the price. However, you're looking at a $1 move. Maybe a little less. Let's call it 90 cents. It's actually a little more. Let's call it 90 cents. 90-cent move is $900 in 2 hours. That's a nice trade. Just trading one lot, one contract. That's a big-time move that, people trend signal gave to, hey, me, you, and everybody else. That's a classic no-trade zone. Simple rule, we never buy, even though you got a blue bar, which means to buy on the 1-minute chart. We never buy if there's red dots above, because the red dots are disagreeing. The red dots are telling you that there's a wall of resistance above the price. No trade. That's a no-trade zone. We're now going to go short again here, and then down again, and we're out on the blue bar, because red and blue are opposites. That's another 40 cents or $400 there in a half an hour using Able Trend Signal on crude. Crude's been really, really good lately. Really, really good. NASDAQ's been wild, a little too wild, crazy. NQ, ES a little bit, but NQ's been really kind of crazy. However, good rule of thumb now, take the trade right at the open, regardless of how far it is away, and put your stop loss, just put your stop loss one tick above the high of the red dot, and if this was a buy signal, which it's not, let me see if we can get one, because I don't even want to show that. Okay. This is the first blue bar, blue dot. We're not going to, obviously no trade zone. We're not going to go with that rule over here because this is not the first row. This is not the first blue bar, the initial signal. Okay, we're not going to do the, putting the stop loss one tick below the bottom of the blue bar. All right, so we don't really have. Here we have one here. Where are we going to put a stop loss? Again, if it's more. Well, let me just go to the ES chart. Sorry about that. I'm trying not to confuse everybody, but I'm just getting all kinds of questions here. And I'm trying to be helpful. I'm really answering questions that I shouldn't be answering in this room, but that's okay. I just want to be helpful to everybody because that's how we are here. Okay, take a look at this ES chart. You got the first trade of the day right here. You got a red bar, red dot, red, everything's red. Normally, we use the 4-point rule for the ES. In other words, we just don't want to get into a trade that's more than 4 points from the red dot, because your stop loss goes a little bit above that red dot. Well, heck, we'd have like 5 points of risk. We don't want to have that much risk. So what we're going to do here is we're going to short it, regardless of how far the ES or the NQ is from the red or blue dots, because normally we have a price area that we're comfortable with so that we don't have don't have a lot of money at risk. We're only about low risk trades with Able Trend. Low risk trades only. What we're going to do is we'll put the stop loss one tick above that the high of that red bar. That's it. You go, well, that's not so bad. I can deal with that, because otherwise you miss out on a lot of these big moves, especially at the open. Especially at the open. Okay. So I mean that's what we're doing, and we're finding that, you know what, that's a nice little addition. Now we got an absolutely perfect sweet spot here. That's just a classic textbook case right there. Sweet spot right there, but we do have a stop out right here. Right here. This red dot slightly higher. Hey, still picked up 4 points on that trade. Nothing wrong with $200 in 15 minutes per contract. Okay? But if we got in at the beginning over there, as I mentioned, we're in at 26.50. We're out at 26.43. That's 7 points on the S&P, $50 a point, $350 winner. Nice trade there. No trade zone. This is definitely more than 4 points from the dots, but there's the sweet spot that we look for. 4 indicators in agreement. Blue bar, blue dot, blue big dot, blue arrow is in play. Everything is just lined up perfect, and we would be stopped out here. However, you picked up 3 points on that. It's $150 in 10 minutes or so. Okay, no trade zone. Now, this is one of those trades where you can get in. Oh, no, actually, I'm sorry. It's not the first red bar. We want to get in on the first blue bar, blue dot. Here's a good example. This trade would this is like 6 points from the blue dot. Normally, we wouldn't get into that because we would like it to be under 4 points, and we just let the trade go. However, you can get in on the next bar. But let's say we did get in, because that would be a good place to get in. Put your stop loss one tick below the blue dot, and it would have been stopped out right there. No harm done. 3 point loss. Nobody's going to get carried away over a 3 point loss. It's definitely part of the trading, and there's definitely going to be losing trades. You know, but we're up a bunch of points going into that trade right there, but then it got really choppy. This is kind of really choppy. Really, really choppy. However, we can get in here. There's the first red bar, red dot. 4 indicators in agreement. Stop loss is just going to go one tick, like a quarter of a point above the high of that red bar. Guess what? We hit a home run on that one, because we're out over here on the blue bar, blue dot. Hey, that was 10 points. Nothing wrong with $500 in a half an hour. That able trend, actually, it's about an hour. That able trend gave to everyone. Remember, red dots above, stay short. Now, once the price gets once the dots get below that high of that red bar, now we just go back to the normal stops again. Second higher row of red dots, like normal. No, everything back to normal again. Yep, Michael says, I like your new stop, because this way you're able to get into these trades and not have to worry so much about the price being too far from the dots. Get right on in. Have at it. Here's another example you're in. Stop loss would be right there, but now the dots come down, so now we go to a normal, there's stop loss, second higher row of red dots, and plus the bar is blue, so you know what? Maybe we lost a point on that trade. No harm done. Of course, no trade zone, no trade zone, no trade zone. Any red or blue together means no trade. The 2 time frames are disagreeing. That's it. Any red or blue together means no trade. Keep it simple. So it's actually, turned out to be, pretty good day today for such a choppy, horrible market. It actually turned out to work really well. And I say, oh, can I do it here? No. The first blue bar, blue dot is when we use is when we get into the trade, regardless of how far it is from the dots, and put the stop loss on the low of that bar. But we can't get in here. This is a no trade. Clearly, they're way more than 4 points from the blue dots. No trade here. Prices are hitting the bottom band. That's a sweet spot. That's a valid able trend sweet spot. And we lost 3 points on that trade. That's really 2 points on that trade. It's a valid able trend trade. Red bar, red dot. You're right up near the red dots. But the prices, turned around a couple bars later, went above the red dot. There's where the stop loss goes. So it goes right there. So we lost 2 points on that trade. And then a no trade zone, and that's the end of the day. This is all after hours now. So good stuff. We just made a little adjustment there. And I think that's going to be helpful to get into the trades and not worry about it. Not worrying about how far the price is from the dots. As long as it's the first blue bar with the blue dots and you have the triple confirmation, or the first red bar with the red dots and you have the triple confirmation. So I think you're going to find that really helpful, and that's been working out really good. We back tested that and found that that's been a big help. So hopefully, this is all a big help for you. The signals have, been really, really helpful and working well, really for many years. We've got the 1 month trial going on. We've got the big sale going on, which is good till the end of the year. I mean, it's the lowest price of the year. Definitely worth a 1 month trial, and you'll get our help. I'll gladly do a live one-on-one trading session with you. We have tech support here if you need any help getting it set up, which is simple, but we have help for that. We're really helpful here. We really have everybody's best interest in mind because we're trading it with it ourselves. So, we want it to be a win-win for everybody. Always here to help. Oh, Frank says, I love your new stop on the first entries. That will be great. Thanks. You're welcome, Frank. Frank's been doing great. Frank's been kind of telling me the last few days that he's really been nailing them, nailing these big moves and following the Abletrend trades. Great job on your part, Frank. I just love when I hear somebody's doing well. I'm just love it. I really do. It's a big deal to me that knowing that, everybody's doing well. So, Michael, CL in the afternoon was great. Can you see and apply your new? Yeah, same rules, same everything, Michael. For CL, ES, again, just put your stop on the bottom of the blue bar or on the top of the red bar. This way you can get into that trade right away and, with low risk, because so often they just take off and they run. And we just don't want to miss any of those big, giant moves. Yes, first colored bar, first blue or first red bar. Exactly correct. So, check it out, see what you think. Hope this was helpful for everyone. Stay in touch. I'm always here to help you. And of course, we're closed on Thursday and Friday like everything else. And have a great holiday, everybody. Happy Thanksgiving.